Well, as you know, the Conference Board, we have members. We are a nonprofit think tank, and our members are Fortune 500 and other large companies. And they are really trying to understand how to absorb the cost of tariffs and how to potentially pass the price on to their consumers without frustrating them.
Has the Conference Board seen testing of David Gura seeing his bananas go up?
Well, coffee is definitely going up.
Yes,
As Constance said, chocolate is going up. Most of our food is produced in North America, so I think we're definitely keeping an eye on the renegotiation of the new NAFTA next year to see if that's another breaking point with regards to our non-discretionary food and other costs. But what's really interesting is that in our most recent consumer confidence index, what we call the present situation index, we had an 8-month continual decline in sort of job expectations for our consumers that we survey. So that sort of feeds back to, is this labor market deterioration, which could, have such an impact on the Fed, are consumers starting to feel that, and how is that also going to change their behavior?
So you have this new consumer awareness, and Tom has talked about that at such great length, recognizing prices are going up, having that moment, as Constance said just a moment ago, where the coffee is suddenly $7, $8
Yes.
a cup. Translate that to business leaders. How much are they worried about inflation? How much is concern about inflation driving the decisions that they're making? How much are they thinking about the ramifications of these trade policies?
I think there is definitely concern about the prices, but there's also the high level of uncertainty. And I know that's a word that we keep using, and now it's several months in. But when you look at these judicial rulings and you think about things, and you think about, would I onshore my factory or would I nearshore to Mexico? Right now, you're not making that decision because you haven't seen what's going to play out in the courts. You haven't seen what's going to play out with some of our largest trading partners like Canada, Mexico, and China. And so there's still this pause from a corporate standpoint.
The message, of course, from the administration is other countries are going to pay these tariffs. Factually not the case. Companies are. And
Yes.
What insight do you have into their capacity to do that, and perhaps more importantly, their patience for continuing to do that as these policies come into effect?
Well, we are looking at this sort of import price index, which is not something that, was necessarily a focus
all
before
these new
this
data
year.
That we're looking at over the course of these
new
weeks,
indexes, yes. And it has not changed. It certainly hasn't declined. It's been flat or it's bumped up a little bit. So the exporters, these other countries are not sort of absorbing the tariff. U.S. companies are absorbing the tariff. How they decide to do that seems to differ industry by industry. And that's why, I believe we're not going to see this sort of one-time jump. We're already seeing that it's phasing in, and then it will continue to phase in over the next year.
I want to get this final question in a too short a visit. Aaron, you are nationally acclaimed in the study of infrastructure. How do we build more LaGuardias? How do we succeed like we succeeded at the train wreck known as LGA?
Well, two things. One is we need public-private partnerships that actually work, and we need a focus on that. And secondly, of this moment, we have tariffs on aluminum and steel, and we have an uncertain labor environment in an industry where a third of construction workers are foreign-born. So if you're going to build something right now and you're reaching out to your general contractor and going to hire them, there is a lot of uncertainty.